This is Market Fatafat and you're watching ET now, but we'll take a detour from stock related chat to a very important development which is happening in the Mumbai realty space, and that is DB Realty has done a very successful QIP fundraise. We are joined by Shahid Balwa, Vice Chairman and MD of DB Realty. Mr. Balwa, afternoon. Thank you so much for your time. Congratulations on your fundraise. I want to talk to you about who were the key participants. You could share a color on how much finally did you raise. I believe that you had nod for about 2,000 crore fundraise.
So, though we had approval for raising up to 2,000 crores, we have restricted our QIP to 920 crores. We have some marquee investors, global funds, and some domestic funds. So, looking at the overall picture, as the fundraise was planned for growth, and it didn't have any particular reason in terms of debt repayment or no trigger of that sort. So we thought that in the current market, this was the correct amount that we should raise, and we were able to raise. Though we had the opportunity to increase the raise, we had demand more than what we raised, but we are happy with what we have raised in the current market conditions.
And probably it's a smart choice to rationalize the fundraise. Might as well, would you consider the remaining part at a later date when the requirement arises?
So, to be honest, I don't think that we have any plans to raise further equity in the foreseeable future. The reason being is that from the coming year onwards, our free cash flow position is expected to be much better than in the previous years, and I lay emphasis on the fact that we will much better, because we already have a pipeline, a visible pipeline, where we have almost 250 crores of rent coming from rent of one of our assets. We have close to about 750 odd crore rupees free cash flow coming from completion of some of our projects, and the hospitality vertical, till it is demerged, will also be generating about 200 crores of cash flow. So we don't need any cash going forward. What we will do is to judiciously deploy this capital that we have raised. So there's a difference between us and our peers, because we are actually a land company versus a full service real estate company. Our real estate cycle is about 1.5 to 2 years, vis-a-vis 5 to 7 years for any other real estate company. We buy the land, or we get into a land redevelopment, and we identify a developer during the course of that, and within a year and a half or 2 years, we have a developer who's already taking the baton forward from us, and whatever capital that we have invested in that project is returned in the form of a deposit or revenue share by that developer, the incoming developer. So we have partnerships of similar nature with marquee names such as Prestige, Godrej, upcoming partnerships with L&T, and many. We have an existing partnership with Adani Realty. So many such existing partnerships will be leveraged to increase that portfolio, and new partnerships with people who are not present in the Mumbai real estate space are coming up in the foreseeable future. In addition to that, we will have a yielding portfolio of almost 1,500 crores, which is in the form of office in Mumbai, which will start yielding about 1,500 crores a year in 3 years from now. So, and then with the demerger of the hotel company, we will really not need any capital going forward.
That's a very important clarification you made, that this 920 perhaps would be the last fundraise for the foreseeable future, because cash flow position will start yielding results in a major manner. I want to scratch that point of cash flows a little more. We are just on the last quarter of this financial 25, 26, 27. If you can talk to us ballpark, consolidated, all the businesses coming together, what kind of cash flow situation would you be on an annual basis?
So I'll talk about the real estate bucket and then the hospitality bucket separately. 25, we are hoping for 1,000+ crore of cash flow. 26, that cash flow should go up to about 1,800 crores. And from 27 onwards, we are hoping that that cash flow will touch about 3,000 crores. So we already have a plan for achieving this cash flow, and it's already set into motion. This 920 crores will be a catalyst to achieving that plan. Now, on the real estate side, on the hospitality side, I'm sorry, we are today 500 operating hotel rooms approximately, and we will have our next hotel, which is the St. Regis Marriott Marquis in partnership with Prestige, which will start operations next year. On a stable state, our share of EBITDA from that project is going to be about 275 crores. So the hospitality venture in 26-25 should generate close to 500 crores of cash flow. And in the year 26, we don't have any opening, but 27 we will open a hotel in Mumbai, which is a 800-room hotel at Sahar, and that will add about 400 crores to this 500 crores of cash flow. And in 27, 28, 29, we'll open two hotels, both hotels in Mumbai. So our hotel cash flow will touch about, by 29, about 1,500 crores, our share of cash flow in these projects. So the real estate will be about 3,000 by 27, 28, and hotel will be about 1,500 by 29, 30. And all these projects are tied up. They are the land is already available with the company. So in the demerger, whenever that happens, hopefully during this calendar year, the hospitality company will be on its own, and it will raise its capital. The hospitality company might have to raise some capital going forward, but we are hopeful that it will be able to raise, and it has got some marquee assets. On the real estate side, we don't expect to raise any capital going forward.
That's a brilliant explanation, Mr. Balwa. Thank you so much for this. You've given a 3-year roadmap, in fact, for the cash flow visibility on both the end of the business. Just before we wrap up, I want to understand, you've given a guidance of 3,500 rooms in total as far as your hospitality arm is concerned. Can you clarify, you will not require any capital raising for that 3,500 rooms?
There are 3 aspects of that, to that question. One is that we are hoping that the hotel company will get demerged and listed by the end of this calendar year. So the realty part will actually support that business till it happens. We have 300 crore rupees of support provision provided for the hospitality company in this fiscal. I mean to say in the coming fiscal. But even that money is going as a loan from the realty company to the hospitality company. So when it demerges, the hospitality company will carry that loan given by the realty company in its balance sheet. With regards to raising further capital, in the demerged portfolio, there are 2 assets that are going to the in addition to the 2 operating assets and 1 upcoming assets. 2 more assets are going. Both will go to the realty company without any cost and no debt. However, there is a residential component in one of the projects which will kind of provide some cash flow to the hospitality project at Bandra West to the demerged hospitality company. So to that extent, no capital will be required. But yes, there will be a capital raise at an appropriate time in the hospitality company, but we are not looking at supporting that from the real estate business.
Excellent. Thank you so much for your time, Mr. Balwa, and good luck on those execution of those plans as well. The current market cap of DB Realty is around 11,000 crore, and as you can see, 3,000 crore cash flows on annual basis by 2030. That's the roadmap which the management has shared. The stock is witnessing a rebound from the day's low. We'll take a short break on that note, and stock specific chat continues here on ET Now. Don't go anywhere.
Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with all the stocks then that are buzzing in trade. And Foram, thank you so much for waiting by with us. Let's start with your first stock that you're going to talk about on the technicals is GICRE. What is the view on the technicals? What is the level that you're keeping an eye out on?
Well, hi, good afternoon, and thank you for having me on the show. To begin with, on GICRE, technically speaking, the stock has corrected quite a lot by nearly 30% in the past, I would say, 1 month. Before that, I'll just talk about a little bit since December. The stock was consolidating and it made a breakout at closer to a level of around 325 levels in the month of Jan. And we saw a good upward rally coming in closer to around 448 levels. However, it formed more like a double top formation. It was quite a brief one, and then we saw a correction of nearly 30%. Currently, the stock has been taking support near 310 levels, which also coincides with a 100-day moving average, and along with that, it is taking support which was earlier in resistance, that is in the month of January. So there are 2-3 factors which are coinciding at these levels of around 310 to around 312, which makes it quite important or crucial for the stock to hold up to these levels. Since from the past 3 days, the stock has been holding up. So it's a safe level to start venturing into it from an investment perspective. Thus, it's advisable to get in around 20% at current levels and accumulate at lower levels closer to around 300 levels. So, from an investment perspective, I would consider a buy of this stock.
All right, positive outlook coming in for GICRE, but let's talk about and readdress the news that was flashing a short while ago that the government has now notified the new EV policy. What does it entail? What does it mean? Who will it benefit and who it will not benefit? My colleague Samir is here to break it down for us. A very good afternoon to you, Samir. And tell us, what are the details coming in this EV policy that the government has now notified?
Yes, definitely. The government has approved the new electric vehicle policy. The policy aims to promote India as the destination, a manufacturing destination for the electric vehicle. And the policy clearly mandates that the players like Tesla, who are giants in the electric vehicle space, not just Tesla, but similar other players, they will be allowed to have a limited import of cars in the country, and also a lower custom duty will be applicable. But the condition is that they have to set up a manufacturing plant here in India and also assure the investment, long-term investment in India in the electric vehicle space. So the policy clearly entails that a minimum investment of rupees 4150 crore has to be done by the EV player. Not just this, the maximum limit, there is no defined limit for the maximum investment, but in addition to this, the domestic value addition, a clear-cut preference, or it has been mandated as per the policy that a 25% of domestic value addition has to be achieved within the 3 years of the production of electric vehicle, and 50% of localization has to be achieved in next 5 years. The manufacturing plant has to be set up in just 3 years after the certification is being done. The policy gives the benefit to the player that a lower custom duty of just 15% will be allowed on the import of car, but it has also been made it clear that a CIF value of $35,000 or above will be permissible. The limit is 8,000. Up to 8,000 of car could be imported here in India, but there are certain other clauses as well. But on these 8,000 cars, a lower custom duty of just 15% will be applicable, but the condition is that a fixed minimum investment of 4150 crore has to be done by the player. Manufacturing plant has to be set up here in India, and also the localization norms has to be achieved by the EV players. So this clearly opens up the gates for the EV players like Tesla and others, that they can come here, they can invest, they can set up the manufacturing plant, and then they can take the EV space much further. The government is looking to achieve the target of around 40% of electric vehicle, two-wheeler penetration by year 2030, penetration of around 10% by year 2030 in the passenger vehicle space.
All right, thank you so much for that, Samir, for outlining exactly what this new EV policy means and who all will likely benefit from that. Thank you so much, Samir, for that. But let's take a look at the small cap index right now, Vinny, before we move on and talk about other stocks. Small cap index in particular, 1.5% recovery coming in for the small cap index. A short while ago, it did turn positive as well. But 1.5% recovery from the day's lowest point. Ditto coming in for the mid cap index. So you are seeing some sort of recovery creep in. Hopefully, we have an hour of trading session. We should end in the positive.
Absolutely, hoping for that as well. But let's move on and continue with the stocks that are buzzing in trade. And Foram ICICI Bank, that's the stock that you're picking out for us in the private banking space. Now, when you look at it, last 6 months, especially in the last couple of months, is when we've started seeing an uptick coming in. What's the view and what's the level that you're keeping an eye out on for ICICI Bank?
Talking about ICICI Bank comparatively, it has been marginally outperforming the benchmark index and particularly in Bank Nifty. In fact, it was facing a lot of resistance near 1050 to 1060 levels, and that is just end of Feb or beginning of March month. We saw a good upside momentum where the stock was up by nearly 3.5%, and it continued to see some good rally from those levels, closer to around 1113. And post that, we saw a bit of a retracement coming, and it's back again testing the breakout levels, and it has been trying and testing to take support near 1060 to 1070 levels. Even currently, the stock price is at 1081, and the lows of today is 1072. So as it says that it's consistently taking support at these levels, is indicating that one who has no positions or is looking at some kind of an entry level can slowly or gradually take a very small position at current levels and keep accumulating, as I consider as one of the outperformers amongst the banking stocks. The relative strength compared to the benchmark is also trending up as an indicator, which indicates that there is some more strength compared to the Bank Nifty or even Nifty 50. Thus, I would say that one can consider a fresh buy, or if one is holding on to the stock, and continue to hold on to it and look for a potential up move. But the holding period should be at least more than 2 to 3 months.
All right, let's move on then quickly. Gaurav, what's the stock that you are tracking for us? I believe it is IFL Finance. What's the news?
Well, yes, IFL Finance is definitely in focus because one of the rating agencies, Fitch, has now revised the rating for IFL Finance to rating watch negative. And this is coming after Reserve Bank's announcement where they have asked the company to stop the new gold-backed lendings. If you look at the IFL Finance portfolio, 1/3 of the portfolio is made up of the gold lending. And after that, we have seen the stock has performed in a negative way. If you look at the stock performance even right now, it is trading at a level where it was sometime in 2022. And that is why this stock is definitely worth keeping an eye on to see when the turnaround hits in for the company.
Surely keeping an eye out on that. But let's move on and Foram TCS you've picked out from the major IT companies. What are the charts indicating for this?
Overall chart of TCS indicates a lot of bullishness. Now, we are seeing a bit of a retracement or a correction, but that is not a point to worry about. Overall, the stock has been forming higher tops and higher bottoms, which indicates that yes, the trend is bullish. There's absolutely no indication of negative divergence. Now, from the past 1 month or 1.5 months, the stock had been facing a lot of resistance near 4150 levels. And now in this week, we have seen a good breakout. In fact, when the previous day, rather day before yesterday, the stocks were falling, comparatively TCS was performing better. And it had been testing this breakout level of 4150 levels. Currently, the stock has been consolidating near the same levels, and it had even made a high of closer to around 4239, which again turns out to be like a breakout level from a very small resistance. Thus, accumulating at these levels is advisable. And in case one is holding on to this particular stock, there's absolutely no problem in holding on to it. And as far as the relative strength is concerned, that is also trending up very well in positive. Thus, one can look at buying or fresh buy small quantity at these current levels. Stop loss should be placed only below 4130, and one can look for a higher target of closer to around 4300 levels.
Coming to you, Ankita, Eris Life and Biocon, why are they in focus?
The stocks are in focus today because Eris Life Sciences has acquired commercial rights to Biocon Biologics India branded formulations business for a total consideration of 1,200 crore rupees. Both organizations have entered into a long-term collaboration to expand the patient access in India. Well, the transaction includes all trademarks, net working capital, and about 430 employees, and that's what the news is on IRIS acquisition of Biocon's business. But the acquisition also marks IRIS' entry into the oncology and the critical care segment. And another piece of news that's coming in for the company is that they've also acquired a 19% stake in Swiss Parental Limited, and this is for a total consideration of 237 crore rupees. On the back of this, both the stocks are in focus today. IRIS is up, trading with the gains of 1.5%, and Biocon is up 5%.
Okay, surely keeping an eye out on both these stocks today in trade, but that was the last stock for today. So thank you so much, Ankita, Gaurav, as well as Forum for joining in with us today on a bit of a truncated version of Market Fatafat, we could say. But thank you so much for joining in with us. And with that, it's a goodbye from Cheryl, myself, as well as the team who put the show together.
So many conflicts.